Thanks for joining us today on The Close. I'm Marella Fernandez. Markets close in a half hour's time. Let's get to the stories we are following in the BNN Bloomberg newsroom. Prime Minister Mark Carney says Canada fully stands behind Greenland and Denmark. In a speech at the World Economic Forum, Carney says rules-based international order is effectively dead, and middle powers must work together to resist aggressive superpowers. Carney says Ottawa's commitment to NATO's Joint Defence Clause is unwavering, adding Canada's working with NATO partners to secure northern and western flanks. And the Foreign Affairs Minister Anita Anand says Canada will bolster its presence in the Arctic. In an interview with Bloomberg at Davos, Anand said Canada will open a consulate in the semi-autonomous Danish territory next month. It's a move that had been in the works before Trump threatened to take the country over. Shares of Lululemon are seeing some pressure after the apparel company paused online sales of its new collection only days after its debut. Lulu says the collection will remain available in stores, but sales online are paused because of customer feedback. There have been complaints about the line itself and product links not working. Silvercorp Metals has acquired a 70% stake in Charat Gold for $162 million in cash. The gold mining company holds licensing rights to projects in Kyrgyzstan. The deal includes hosting fully permitted gold projects and surrounding exploration licenses. The Vancouver-based company commits to invest $150 million for phase one and $400 million for phase two for the development of mines in the Central Asian country. A quick look at where we stand right now on the market. The TSX down 338 points after reaching a record high only yesterday. It's at 32,758. Moving south of the border, of course, markets were closed on Monday in the U.S., but today a 142-point drop so far in the S&P 500. The Dow Jones sinking 843 points, or 1.7%, and the Nasdaq down 562. That's a 2.4% loss. So as we mentioned, the Prime Minister has joined other world leaders in Switzerland at the World Economic Forum. And on stage, the Prime Minister did not mention Donald Trump, but he did speak about the disruption of the world order.
The middle powers must act together because if we're not at the table, we're on the menu. Great powers can afford for now to go it alone. They have the market size, the military capacity, and the leverage to dictate terms. Middle powers do not. But when we only negotiate bilaterally with a hegemon, we negotiate from weakness. We accept what's offered. We compete with each other to be the most accommodating. This is not sovereignty. It's the performance of sovereignty while accepting subordination.
All right, let's go to Roland Paris on this, former senior advisor on foreign policy to the Prime Minister, professor now of international affairs at the University of Ottawa. Thanks for your time today.
Thank you.
What's your take on the Prime Minister's remarks about being on the menu?
Well, I think he was telling the truth, which is that if the United States continues to effectively divide and conquer, especially among its closest allies that it's been targeting one after another, then they are each weaker in dealing with the United States individually. And that's Donald Trump's approach. He doesn't like multilateral gatherings because the relative weight of the United States is much greater when dealing one-on-one with other countries. So Mark Carney was pointing out, I think, the obvious, which is that there's much more negotiating leverage to be had by working together.
Okay, who do you see then as those middle powers, and who do you see already working together against a changing world order?
Well, he's in Europe, and there is an active discussion taking place right now in Europe about how to deal with the American threats towards Greenland. So I'm sure that that is the context in which many of his remarks were taken. And he was essentially saying to those countries, you need to buck up because caving in is not a strategy. Now, whether this leads to an actual change in Canadian strategy and Canadian approaches remains to be seen, because in practice, Mark Carney has been very, very careful to try and avoid provoking Donald Trump or criticizing him directly.
Okay, so do you see signs of caving in from any of the European allies, from Canada? If so, what does that look like?
Well, I think what he was indirectly referring to was the fact that many countries, when Donald Trump came into office in his second term, were kind of racing to get to the Oval Office in the hopes of having some kind of special side deal with Trump. And he was able to negotiate very advantageous arrangements for the United States. Even the European Union as a whole, which is already a collection of countries, arguably a collection of middle powers, accepted a 15% tariff on European goods entering the United States as a way of just trying to get through what they thought was a moment of increased pressure and threats from the United States. But I think that one of the messages here from Mark Carney is that caving in invites further demands from Donald Trump. But again, what that actually means in practice and how willing Canada or any of these other countries will be to push back remains very unclear.
Okay, so Roland, what is your take on Trump's demand for Greenland for security reasons?
I think that it is outrageous. What we're seeing here is something from the 19th century. He's basically demanding ownership of Greenland. That is what he has placed as the most important thing for him. When he was being asked about this in interviews, he has said, really, it's the security, providing security in Greenland, even additional U.S. presence in Greenland, even a commitment from NATO to dramatically increase its presence in Greenland. Everything that's been offered to him is not good enough. Why? Because he thinks ownership is really important, because in his own words, it's psychologically important. He's asked, important for the United States or important for you? His answer is, it's important for me. This is an incredible, mad, individual wish to win over territory. And I see it within the context of him trying to show that he has accomplished more than the greatest presidents in the United States, including by expanding the territorial reach of the United States.
Should Ottawa then be legitimately concerned about a military push against Canada?
I think that the prospects of the United States using military force against Canada are so minuscule that they're close to zero. Nevertheless, there have been a lot of things that seemed impossible in the last few years that have suddenly become possible. It's jarring. Even just this episode with Greenland seems like it should be seen in a movie that would have been unbelievable just a few years ago. So I think, it is jarring to hear about the Canadian Defense Department, plotting out what Canada would do in the case of a U.S. military assault on Canada. To be clear, the job of military planners is to plan for the unthinkable. And I don't see this as an immediate or even medium-term or even long-term threat to Canada. The United States and Trump can get a lot from Canada by using economic pressure, and that's a threat in and of itself that we really need to pay attention to.
What would need to happen for NATO to be officially compromised? Would the U.S. have to move militarily on Greenland?
There's not going to be an official moment when NATO is compromised. The whole idea of a defensive military alliance is a set of assumptions and trust. And it's trust that the members will come to each other's defense. And it's an assumption on the part of other countries that if they attack any NATO country, that they're going to face the combined strength of the alliance. So it's a set of ideas that gets reinforced over and over again. And when you have Donald Trump not just raising doubts about whether he would actually come to the defense of Poland, for example, if it were attacked, but actively using threats against another NATO country, then one of the things that that does is it damages trust. Damage might even be a mild word here. And it really undermines the sense that NATO is united and would stand together in the face of external threats. Without that, it's very difficult to sustain a military alliance, even if it exists on paper.
Roland Pariser, got to leave it there. Thank you very much for joining us today. Appreciate it.
Thank you.
Coming up next, U.S. market seeing some declines today, driven by the Sell America mindset. We're back in a moment. North American markets nosediving today with the threat of new tariffs on Europe and concerns about the sovereignty of Greenland. Let's go forward with this thought. Michael Zinn is joining us, Managing Director, Senior Portfolio Manager, UBS. Michael, thanks for your time.
Good to be with you, Marilla.
How concerned are you about the Greenland storyline continuing to play out on the markets?
This seems like it's going to be a year of policy uncertainty, and that's just another example of it. It's a midterm election here in the United States. I would say that certainly wasn't necessarily on our bingo card a week or two ago. I think what's driving markets maybe a little more profoundly today is what's going on in Japan, where we are seeing yields surge a little bit. And that, I think, is a little bit more of a concern because rising bond yields in Japan have been tugging on global yields for a while now. And days like today where they kind of push the top end of the ranges and push U.S. rates to the top ends of their ranges, those begin to discourage investors from taking risk and encourage them to go into other things like gold. So, as we reach the end of today's trading day and we see not really much respite in what's happening with U.S. 10-year yields, Japan 10-year yields, you're seeing, stock markets kind of hit their lows near of the day. You're seeing gold near its high of the day. That probably means investors might be advised to be a little bit patient, see how this works out. We think this is all landing in a fundamentally pretty strong backdrop, so I don't think this is, going to haunt us for the rest of the year by any means. But, these kinds of yield-spawned sell-offs can be sharp declines, and you want to just be mindful of patience sometimes being rewarded.
Okay. You see more of a bull run in 2026. I'm wondering, what are the sectors you see getting ahead this year?
Yeah. It's a change in the music, I think, from the previous couple of years. Of course, in the past, tech has been leading the charge, and the Mag 7, of course, have been on the top of everyone's favorite playlist. And this year does feel a little different. First of all, rest of world is doing perfectly fine as it did last year. Tech is lagging this year. We're seeing energy do very, very well. Materials do well. Small cap do well. Housing do relatively well. So, other sectors, the kind of also magnificent 493 are coming to the fore. So we're having basically a lot of fun looking in other sectors a little bit away from tech, and things like materials and energy are areas that we're looking at a lot.
Okay. Let's talk about at the midterm year. You mentioned that in November, of course, you have the midterms. What usually plays out in a year like this one? Is it more volatility?
Yeah, there's more volatility in the 4-year cycle. It's typically the least rewarding year on average. That's kind of seasonality analysis, which is certainly no guarantee. But we're seeing, with the affordability push here in the U.S., there are a lot of cross currents. We're obviously seeing, notes about credit card and the levels of rates that they can charge. Last week, the power producers were singled out, and they're talking now about having a different kind of auction, and the big data center hyperscalers needing to underwrite their own construction potentially of power plants to power their stuff. And so, I think there are some potential, policy, more populist haymakers that can be disrupting markets. Typically, that's a lot of short-term volatility and often leads to good buying opportunities, but you want to be a little bit patient. And then on the other side of things, you're having a real affordability emphasis. And so there's an emphasis from the administration on keeping rates lower. And they have different levers they can pull in order to achieve that. They can do things with getting the government-sponsored entities to buy mortgage bonds. Obviously, they have some influence on who the next Fed chair is going to be and what their policies are. And so, days like today where you see yield surge are concerning. And at the same time, you also, maybe want to be on the lookout for government, some level of intervention where there's a response from the government in order to keep rates low, in order to keep affordability improving.
Can I just get you, before I have to let you go, on tech specifically, because we saw some steam come out of that at the end of last year. It hasn't really reinflated much. It's a little more volatile this year. What do you expect for tech this year? And I know you think that Asian tech might even do better than American tech.
Yeah, we are seeing a re-rating in a lot of the Asian tech companies. I think that's largely a function of the fact that there's a big emphasis now on memory, and a lot of those fabs are housed in Asia. You're seeing much more emphasis there. I think in terms of the big seven platform players, there is more of a clash of the Titans dynamic going on there, where they're going after each other's businesses more aggressively, and not just the Mag 7, but of course some of the big private players as well, all going after advertising business, e-commerce business. So this is a little bit of the survival of the fittest mode, and it's not clear, to what extent all of them will flourish. And so I think a lot of those names, not all, but many of those Mag 7 names will be a source of funds, because the market, of course, tends to follow performance. And we've seen those lag, and we're seeing the rest of the stuff do a little bit better. So when those earnings reports come up, I think the biggest distinguishing factor is going to be particularly the software companies that have cloud offerings and what that rate of cloud growth is. I think that's going to be an important thing to watch.
Michelson, got to leave it there, sir. But thank you so much for your time.
Thanks again.
Coming up, Netflix moves to an all-cash offer in the Warner Brothers bidding war. More in a moment. Netflix has amended its bid for Warner Brothers. The streaming business initially agreed to pay $27.75 a share in cash and stock. Is now offering payment entirely in cash, American dollars, of course. Here to talk about that, Julian Klomochko, founder, CEO, CIO of Accelerate Financial Technologies. Thanks for joining us today.
Hey, thanks, Morella, for having me.
So this deal puts Netflix in debt. Do you perceive the cash offer as one that was needed, since the board already supported the offer Netflix had on the table before?
That's a great question, Morella, and it just continues this saga of the Warner Bros. Discovery Netflix storyline, and you also have Paramount Skydance in the background with a hostile bid. So what happened here was initially Netflix struck a friendly deal to acquire Warner Bros. Discovery, and the consideration was $27.75, made up of $23.25 cash, and then Netflix shares worth $4.50. However, if you look at Netflix share price performance since then, it's dropped. It's been under pretty significant selling pressure. So with that, it's traded to the bottom of the collar and was no longer worth $4.50. So what this amended merger consideration does, it effectively makes it worth $27.75 again, which was the initial deal consideration. So it's not an increase in price, it's just getting to where they used to be. And there's a couple reasons why they did this. Number one, with their consideration worth less and less seemingly every day as Netflix shares traded down, the hostile bid at $30 cash per share from Paramount Skydance looked more appealing for Warner Brothers Discovery shareholders. The other aspect is that share consideration initially, that creates just more paperwork and more administration. And this straight cash offer, plus the spinoff, of course, it makes it slightly easier, but ultimately it's not really a step forward. It's really just getting to where they were prior to Netflix's share price trading down.
Okay, so a couple of things. You mentioned the prices, the share price going down for Netflix. I take investors don't really like this offer. And I know the Warner Brothers offer expires midnight tonight or by tomorrow. Do you expect a new offer by them?
Yeah, so the Paramount Skydance hostile takeover bid at 30. I'm highly certain they're just going to extend that. Listen, this is a takeover battle that is going to play well into 2026. Both of these proposed transactions have, quite the regulatory path to follow just to get approval. So this is not going to be a quick process. It'll be fairly drawn out. I expect probably higher bids from at least Paramount Skydance, if not Netflix. So I think this story is still relatively early on, and there's going to be a few more chapters written here.
Okay, I've got about a minute left. I'm just wondering what you expect from Netflix reporting after the end of the day.
Yeah, so obviously Netflix's share price has been under a bit of pressure here amidst this takeover, and they've never been much for M&A. They've primarily grown organically. So shareholders are a bit upset regarding this change in strategy. As for their quarterly results, it could result in a bit of a relief rally here if performance beat expectations. Historically, Netflix's stock has been fairly volatile around quarterly results. That said, over the long term, one of the best performing stocks. They have a lot of growth left in the name. So I expect directionally could be positive. It really depends on kind of how they stack up versus street estimates. Obviously, not the best tape today, but Netflix's stock outperforming the market just on a bit of relief that they're no longer issuing shares, something that upset shareholders. But I think ultimately for Netflix shareholders, if they were to lose this bid for Warner Brothers, then it'd probably be for the best.
All right. Julian Klimachko, got to leave it there. Thank you for joining us. Appreciate it.
Thanks for having me.
Coming up next, the closing bells on Bay Street and Wall Street. Here are the closing bells for the end of the trading day. At the NASDAQ, bond blocks ringing the closing bell, and New York off-the-hook yachts ringing the bell. At the TSX, it's Diversity in Finance Network to celebrate the 5th annual Diversity in Finance Conference. You're watching the close on BNN Bloomberg. I'm Morella Fernandez. Here's how we ended the day on Bay Street and Wall Street. A down day for the North American markets. The TSX dropping 340 points today. That's over 1%. And ending the day under 33,000. 32,750 is where we landed. The S&P 500 dropped 143 points or 2%, taking it to 6,796. The NASDAQ 561 points down today, 2.4%, and taking it to under 23,000. Let's get to the movers in Toronto. Orla Mining today gaining 10.7% or $2.26 a share. We'll get into that with Stephanie Hughes in just a moment. Let's get to G Mining Ventures. It moved up as well over 10%, closer to 11. It's up 276% over the last year. A gain today of $4.64 a share. Let's get to Centerra Gold. It gained $1.89 a share or 8% today, ending the day at $25 flat per share. And then Aya Gold and Silver also gaining over 7%. It gained $1.70 a share, taking it to $24.91. Let's get to ATS Core. It dropped today by over 7% or $2.93 a share. And Shopify down as well. The e-commerce platform dropping 6.6% to $14.09 a share, taking the price to $200. Kinaxis also moving down today, dropping 4% and taking the share price to $155.38. Let's get to Bloomberg's equities reporter Stephanie Hughes. She joins us now. Stephanie, gold just on another tear. Is that the reason Orla Mining had a big day?
Marilla, that's exactly the reason why Orla Mining is on an absolute tear today. That stock went by over 12% at its peak, which brought the stock to an all-time high. It also marked its biggest intraday gain since November. And I'm starting to sound like a broken record when it comes to these precious metals companies, but that's all thanks to rallying gold prices, which as of today have surpassed $4,700 an ounce. It's another flight to safety play that we saw yesterday, this time around. The continuing standoff between the U.S. and Europe around Greenland, the tariff threats that have been arising from Trump's administration, that and a massive bond sell-off triggered by a panic in Japanese government debt that sent a ripple across the markets. So we've been seeing that weigh on the U.S. dollar, rather the Greenland headlines more than anything. And because the U.S. dollar is cheaper, that makes commodities cheaper for buyers in other currencies who are looking to step into the market. So that's really adding more fuel to that fire there. So much like yesterday, the TSX top performers have almost entirely been gold and silver miners, including Orla that we just talked about, G Mining Venture that you just referenced at the top there, Centerra Gold, and many others, Marilla.
Okay, let's get to ATS on the flip side. It was down by quite a bit. What happened there?
Yeah, ATS is having a rougher day, and it's part of an ongoing issue. So those shares fell by over 10%, which falling for a second day in a row after the CFO announced his departure for another company. So CFO Ryan McLeod left ATS recently to join the flight simulation company CAE, which he'll take that helm starting in late February. TD Cowen analyst Sherilyn Radburn said that she thinks investors will be understanding that McLeod is deciding to go for a larger firm and that he does leave behind a finance team that is more than capable of helping oversee the CEO transition when Doug Wright takes the mantle. Still, she called the announcement a slight negative because it's the latest in a string of executive-level departures that's kind of shaking up the C-suite and adding more uncertainty to the company. So, that's been weighing on the stock yesterday and today. And ATS in general has been a pretty volatile stock, playing a little red light, green light over the past year, trading relatively flat last time I checked. But today's move did send it down into the red, and that's where it looks like it's trading on a year-to-date basis, or on one-year basis, I should say, also, Marella.
Okay, we will leave it there. Stephanie Hughes, appreciate the update as always. Let's go south of the border. Bloomberg senior equities reporter Bailey Lipschultz is there. Bailey, QIAGEN stock soaring today. What do they do?
Yeah, this is a company in the molecular diagnostics space. And the reason it had its best day since 2000, not making a mistake, in over 26 years, was because new potential interest in M&A. And this is a company that is not new to these kind of rumors or even outright expectations. This is a company that had struck a deal to be acquired little while ago, and that ultimately was pushed back by activists who wanted a better price and did not tender their shares. So this is a company that we could see fit into the broader medical device, medical diagnostics M&A wave that we saw in 2025. So that continuing to potentially pick up. It'll be interesting to see what this ultimately looks like and does play out. Bloomberg broke the story and did report that these talks are early. They are a bit preliminary, so certainly something to keep an eye on. But whether it was short covering or investors wanting to get ahead of a deal announcement, we certainly saw that big rally again today with the stock closing up 17% again, the biggest day since April 2000.
No, that's a long time. All right, let's get to strategy stock. It moved down. They're a Bitcoin treasury. What happened?
Yeah, so not only do they normally track the movement of Bitcoin, which broke below $90,000, they also announced that they spent more than $2 billion acquiring Bitcoin in the past week. When you break out the math, the average purchase price of that $2 billion was around $95,000 per token. So the issue with Strategy, formerly known as MicroStrategy, they are the biggest Bitcoin holder, the biggest company known as the digital asset treasury. They simply trade on the idea that they can buy Bitcoin better than you can. But the big pushback has been its seemingly continuous string of them announcing deals, or at least announcing purchases of Bitcoin at premiums to where the Bitcoin token is ultimately trading on the announcement, or at least later that week. So we did see that under pressure, and a number of other companies in the broader ecosystem, whether they're just holding Bitcoin and other crypto or in crypto mining or other parts of the industry, under pressure today amid the broader risk-off sell-off, and again, the fact that Bitcoin broke below that $90,000 mark.
Okay, let's get to 3M, everybody's favorite paper products, of course, with Post-it notes. Their annual profit forecast is below estimate. What's going on with 3M?
Yeah, below expectations, analysts calling it mixed. The big question is kind of the path forward. This is a company that we know for Post-it notes that has been in the news for their earplugs as kind of industrial safety. But the big question is, how can they reinvent themselves as a company that has talked up their ability to grow in areas like nuclear, in areas like data centers. Data centers, according to Bank of America analysts, only account for about 3% of their business. So not only did the market sell off today, so you had the removal of a catalyst when you miss expectations and you are dealing with potential impacts from tariffs and kind of underlying demand, that dented their expectations for the year ahead. And again, when you're trying to play into the themes that have been working in your stock that over the last 12 months has outperformed expectations, even when you miss on the margin, and in a day where we saw a sea of red, it typically we can expect the companies to be notable underperformers, but want to call out that this was the worst day since the days after tariffs were announced back in April. So kind of a big size and scope for one of the worst performers in the S&P 500 and the worst performer in the Dow. Got it.
Bloomberg's Bailey Lipschultz, appreciate the update. Thank you, sir. Coming up next, we'll dig deeper into the market and what happened with the sell-off. We're back in a moment. The TSX declined alongside its American counterparts today during what has been largely a global sell-off in risk assets driven by tensions among NATO allies regarding Greenland. My next guest says there's some buying opportunity in the Canadian market. Let's go to Jeffrey Torrey. He's a portfolio manager at Pembroke Management. Jeffrey, thanks for joining us today.
Nice to be here with you again, Marilla. How are you?
I'm good, thank you. Are we in for more days like today with the Trump administration's agenda?
Well, I think if you saw in the sort of global financial press today, there was the revisiting of this theme of Sell America, and I think some investors probably have a little PTSD about what happened last April when all of the tariff sort of tantrums started, and you had a great year in the stock markets last year, uncertainty today, and so I think weekends when the news flow starts to reverse like it did today, and certainly when you follow the news flow, it's a pretty scary time when you have the standing president of the United States putting the American flag over all of North America. It's a bit disquieting, let's say, because as a couple of articles indicated today, I think Carney spoke when he was in Davos, the world order is changing for sure.
Yeah, that was a post Donald Trump put out today where he once again put the American flag over Canada, which is something he threatened, of course, last year for sovereignty. Let's talk about gold for a moment. Gold gains because of all of the uncertainty and people are unsure of what's to come. They want those assets. What do you see for metals this year on the TSX?
So we're not gold bugs here, but we understand the role of gold in investors' portfolios as a great diversifier, and obviously in the last two or 3 years, the metal has done amazingly well, and then in the last year or so, the stocks did well as operating leverage kicked in, and so the way we see gold is very hard to model what the price should be, but if you think of the role of gold as a a hedge against constant debasement of currency, against uncertainty, store value. There's a shortage of the physical metal, and over the last couple of years, central banks have been buying. It puts a very interesting floor under gold, and I think, whatever your sentiment about it might be, I think gold is doing what it should do right now, which is in a time of uncertainty, it's sort of like a safe haven for investors. So I see it has a great role in a retail investor's diversified portfolio. Just don't speculate in it.
All right. We've seen the market broadening out. That started later in 2025. Mostly that is positive. Where do you think it still needs to broaden out further?
Well, if you're leading me to, our views certainly on Canada, and we also have significant exposure in the U.S., is the market was very concentrated in 2025 in the U.S. in particular, where most of the gains, or a majority of the gains of the S&P, came from the what they call the Mag 7. The small cap stocks did okay last year, but not great. But the earnings growth in the sector is still quite good. So this year, you've actually seen some broadening out in the United States. In Canada, the indexes were dominated last year by the mining and gold trade. But our view is, despite the success of the non-resource small cap sector in Canada last year, that there's lots of value. I'm people who know me know that I'm a bull on Canada. I'm a bull from a macro standpoint because we're a great country. We have great education system, and we have lots of opportunity of where to invest, assuming we want to exploit our natural advantages. But there's a ton of Canadian companies that are doing well that just aren't getting recognition in the public market.
Okay, let's get to tech for just a moment, because we know a lot of investors threw out software companies last year on concerns about AI. Would you invest in some of these software companies now? Are there opportunities to be had?
So I think, yeah, and the answer is yes. The sort of drawdown last year in the software companies was fairly significant, Constellation being sort of the poster child, and again, for those who don't follow them actively, there's this fear that AI will reduce the need for sort of sophisticated coding, make it easier. If you look at the long-term track record of Constellation as a capital allocator, it's amazing, and the stock is obviously much cheaper today than it was last year. And yet the opportunity set in terms of what Constellation can buy is probably bigger than ever. The example that I wanted to cite for the audience today, which is a smaller company that Pembroke owns and follows, is a company called VHI, which is very active in the healthcare software space for governments and government agencies. It also has had a bit of a wild ride. And I was just looking at the data before coming on the call. It's now trading at less than 10 times 2027 EBITDA. It's cashed up and has a very large runway in terms of acquisition opportunities over the next 2 or 3 years. And I think one of the things for listeners to understand is that ripping out mission critical software is not as simple as people think. And so I think what you have to do when you look at the resiliency of software companies is to buy the stocks of the companies where there would be incredible business risk in replacing that software by something new and unproven. It's some entrepreneur in a garage who's writing new code. I think that you want to understand that incumbency is quite powerful, and that a lot of these organizations are fairly hidebound, and they wouldn't take the risk of throwing out something that works. And so that certainly is the case for VHI. Constellation is more of a collection of different types of software, but it very much applies where there's business risk in making the change.
Jeffrey Torrey, I got to leave it there, sir. But thank you for your time. Jeffrey Torrey, Portfolio Manager of Pembroke Management. Coming up next, Netflix just reporting their fourth quarter earnings. We'll get into the numbers when we come back. Netflix reporting its next quarter earnings right now. Fourth quarter results coming in here. Revenue at $12.05 in the billions, so up 18% year over year. The estimate had been shy of that, $11.97 billion, so a beat for the company there. Earnings per share, 56 cents versus 43 cents year over year. And then let's get to the forecast. They see revenue coming in at $50.7 billion to $51.7 billion is the estimate from Bloomberg is 50.96, so $51 billion. And Netflix sees a doubling of ad revenue in 2026 versus 2025. Netflix to pause share buybacks so it can accumulate cash to help fund the pending Warner Brothers acquisition. So let's unpack some of this with our next guest, Melissa Otto, head of TMT research at S&P Global, joining us. Global Visible Alpha joining us now. Thanks for joining us today.
Hi, good afternoon.
Let's talk about the stock going down after hours, but it's been sliding for a while since the Warner Brothers offer was on the table. Let's start small. It's a beat for the company, so why do you think investors aren't happy?
It's a bit of a snoozer. I mean, more or less, top line revenues in line with Visible Alpha consensus. Operating profit up 30%, also in line more or less with consensus. Looking at the guidance for Q1, revenues for Q1 and for the full year, both in line with Visible Alpha consensus. And for Q1, EPS a bit below expectations. Expectations looking for 0.80 and the company guiding to 0.76. So, yeah, all in all, not exciting. I think, and it's very much at the moment a deal stock. So, as we put the numbers together and this deal comes to fruition in the future and we see what this is going to ultimately do to the growth of the company and what the scalability of these fundamentals are, then, that could potentially be a catalyst.
Okay. Let's talk about the Warner Brothers offer, which has been moved to an all-cash offer. What do you think investors don't like about this? Because clearly they're showing that by selling off the stock.
Yeah, it's a tricky one, right? You have a dynamic in place at the moment that is not necessarily in the best interests of shareholders. Shareholders are likely to want the highest price. They're going to want to get the best price for their shares. However, that may not actually be culturally the best thing long-term for the growth of the company. And so that seems to be some of the dynamic that we are seeing in the market right now.
Okay. So now with the offer being all cash in a sort of better bidding war with Paramount Skydance now, which has had put an offer forward of cash, is that going to mean Netflix takes on debt, adding on a layer of concern for investors?
All cash deals, by and large, tend to be much cleaner. They tend to be something that is just makes the deal flow more straightforward. However, having said that, how it ultimately plays out in terms of what Netflix's ultimate cash flow generation is going to look like over the next couple of years remains a question.
Okay, let's talk about AI for a moment. I know this company is using AI now that they offer ads as part of a package for people. How else can this company sort of see more exciting results, as you say, moving forward?
AI is a critical dimension, in my view, to this story because so much of what ultimately is going to drive AI in the future is likely to be around who controls what portion of the corpus, which modality, and Netflix is an important player in the video modality around where AI could start to play a role. We already have seen Disney and OpenAI get together. What sort of role Netflix can play in that, and how they align with all of this great content that they could potentially get from Warner Brothers will be an important dimension to their role in the future, because ultimately they're going to be competing with YouTube, Google TV, and that's really going to be the universe that's probably going to dominate a lot of the video modality going forward, especially as Alphabet begins to really gain momentum with their TPU chips.
All right, Melissa, I'm going to leave it there. Appreciate you joining us. Melissa Otto is head of TMT research at S&P Global Visible Alpha. Up next, leaders gathering at the World Economic Forum in Davos, Switzerland, amid the tensions over Greenland. Back in a moment. As leaders gather at the World Economic Forum in Davos, Switzerland, rising geopolitical tension is definitely top of mind. But IBM's Vice Chairman Gary Cohn says that this too shall pass. He's still optimistic about the U.S. economy. He spoke with our Bloomberg colleagues for more on this.
I think what we've seen evolve in the Trump presidency is this desire to negotiate and get a deal. So ultimately, is Greenland all about getting a deal? We know that the North Atlantic is becoming much more of a sought-after territory from a militaristic standpoint. So I understand the president's concern to have a military presence and protection of the North Atlantic. As if we want to expand our air defenses, Greenland is a pretty strategic spot. So I understand what the president's interest is. They also have rare earths, which is something that we in the United States can't supply to ourselves. So the question is this a negotiating posture to get a deal with Greenland, to get more rare earths, to get a larger naval and air force presence? And it may be. It does seem like that's on the table, and this may all evolve in a place where the United States ends up in a very good strategic position.
Do you think that's the way the business world sees it, coming into the World Economic Forum this week?
You know, I think the business world's split on it. You know, you've obviously got a European presence here and a U.S. presence here. I think the U.S. presence is a little bit more optimistic that this is going to end in the right place, and we've seen this before. I think the European contingency is a little more leery and say, look, you know, maybe you're confident this ends well. We don't like being in the middle of this right now.
Which is a reason why in European hours, treasuries were selling off much more. The dollar was much lower. And as the U.S. wakes up, people are coming in and buying it. How much is the Sell America trade real, and how much is it a perception based on these moments, the ones that we saw on Liberation Day?
Look, there is some Sell America going on right now. I've met with a couple different asset managers this morning, said that global funds are reallocating a little bit out of the United States. So you see that, you know, interest rates are higher, so people selling bonds, rates go higher. People are repatriating currency back home. They're selling dollars to buy local currency. They're selling stock market. They've got to repatriate currency. So I think we're seeing a little bit of that. I don't think that's what's driving the overall market right now. It doesn't feel like we've got to liquidate America. It feels like we've got to trim around the edges in asset allocation models going on.
This goes back to the wrestling match we were describing. AI on one side, you've got politics on the other, and they're facing off, and it's sort of Sell America until AI rears its head and gets in the lead, and that's what we're doing.
And it's Sell America until the light turns green and everyone has to buy America again.
Right.
Because in the real reality, if you look at the U.S. economy and what's going on, we've got one of the strongest economies in the world today. You know, we're growing at 5+% growth. You know, we've got a pretty good tailwind going on behind us. I mean, right now, the only thing stopping is all this geopolitical risk. If and when, and I say when, this geopolitical risk settles down, the market's probably going to take off again. That's been the history of this pattern.
Settles down. Gary, 2.5 weeks ago, we captured Nicolas Maduro. It feels like a decade ago. Now we're sitting in Davos talking about Greenland. You think geopolitics will settle down under a Trump administration?
2 weeks. Yeah, we're going to settle down. I think that there's a couple balls up in the air right now.
Well, a couple.
But, you know, this too shall pass.
Greenland.
We can go back in the last 8, 12 years, and there's been periods of time where we've had these, you know, highly volatile geopolitical moments. We're in a highly volatile geopolitical moment right now. And by the way, I'm not sure it's a coincidence that Davos is right in the middle.
All right, interesting. I want to ask you about the Fed chair race, because you were in the room with the president in Trump 1 when he decided to go for Jay Powell. What kind of questions do you think he's lobbing at these individuals? And in the end, who do you think it's going to come down to?
Look, the president's in an enviable position right now. He's got, what we know, he's got 4 really highly qualified candidates. Any one of those 4 could do a really good job in there. I think the president at this point is trying to understand the sort of mindset of the person he's going to put into the position. The president clearly has a view on what interest rate policy should be. The problem or the opportunity with the Fed job is once he appoints someone into that job, they're an independent agency, and he loses his day-to-day contact with that person. So I think the president learned in the first administration that it's very important to who he puts in that job, and that he should make sure that he's very comfortable with their policy mandate before he appoints them.
Do you think it's become even more important now that that individual needs to have the ability to persuade the rest of the committee in a way that maybe a few years ago that wasn't as relevant? There's just a sense on Wall Street that the president's approach in the last 12 months has galvanized the rest of the committee to dig in.
Look, I think the committee structure is going to be the committee structure. I'm not sure if the chairperson can ultimately sway the committee that far. Could they sway one vote or two votes potentially? But you've got some very strong regional bank presidents. You've got some very strong governors in the Fed. I think the Fed ultimately at the end of the day is going to be a tough group to persuade. I think they'll come out in the right place. I mean, historically, the Fed has done a very good job. Have they been a little bit late? Yeah, they were late in the transitory inflationary problem of COVID. But they've caught up. They've gotten to the right place. And I think if you look at the Fed through the cycle, they end up getting to the right place.
You were diplomatic about the four candidates. Can I just talk about some of them individually? Governor Chris Waller. You can too.
Yeah, you can.
Governor Chris Waller, I believe you were part of that process, right? Mm-hmm. Vice Chair Clarity, you were part of that process too. What was the president's approach to that process back then? Was he as involved as he appears to be now?
He was not as involved then, but remember, he was a first-term president who was an outsider to Washington. That was part of his mystique, as he was an outsider to Washington. He knew he had to put someone into the Fed chair's role, and he approached it. But I think now, understanding the importance of interest rate policy and understanding his view of interest rate policy, he's taking considerably more time talking to the various candidates.
I'll ask you the question that might get you in trouble. Is Kevin Walsh a chameleon? Is he a hawk? Is he a dove? Is he whatever it takes to get the job? Why didn't he get the job last time?
Look, Kevin is highly qualified.
Without a doubt.
Kevin has served in the Fed.
Without a doubt.
Kevin was there during some of the toughest days of the Fed during the financial crisis. I personally was dealing with Kevin on an hourly basis as we were trying to figure out what was going on in the United States financial system. Kevin was an active participant in the outcome that we all benefited from. And without Kevin's wisdom, I'm not sure we would have ended up in the same place. He's a highly qualified candidate.
It sounds like out of the four, that's who you'd like to see in the seat, based on that strong defense of Kevin Walsh.
I think Kevin Hassett's a great candidate. I worked with Kevin Hassett when I was in the White House. He was the CEA director.
Share your thoughts on Kevin Hassett.
Kevin Hassett was an excellent CEA director.
Let me tell you what some people say about Kevin Hassett, that if he's appointed, that's a puppet of the President of the United States. He'll sit there, smile, and do whatever it takes. Is that unfair?
You know, you and I both know, whoever gets appointed, there will be people that are disappointed and will have negative things to say about him. On the flip side, there will be people that will be very happy with whoever one of those four gets appointed. And if it's a fifth candidate we haven't seen yet, they'll be equally as happy with that one.
There is a sense that whoever's going to be there, they're going to cut rates. How much is the entire build-out of AI, which is what you spend most of your time talking about here, based on the idea that the Fed is going to be easing policy no matter what?
Like the AI build-out and rates, they're linked, but they're not inextricably linked. This AI build-out is being built because there's demand, there's forward demand, and the AI companies feel like they are behind the curve in being able to facilitate the needs of their clients. They are going to build these data centers. The only question that rates have is what is the ultimate all-in cost to build these things? And interest rates are going to be important. These are big, huge CapEx expenditures with 30-year lives. So, you know, the amount of interest you're going to pay to finance one of these centers is important. So 25 or 50 basis points has a lot to do with these decisions. But I will caution you, like I always do, the Fed only controls Fed funds. They control overnight rates. You've been talking all morning about the 10-year. The 10-year is at 4.30. Where these data centers are going to be financed, they're going to be financed to the medium, to the long, to the very long end of the curve. It's going to be a combination of duration. Fed funds is not going to affect that. So Fed funds could possibly go down, and the interest rate to finance a data center could be unchanged.
IBM's Vice Chairman Gary Cohn. Up next, Prime Minister Mark Carney speaking at the Economic Forum in Switzerland and says, if you're not at the table, you're on the menu. Back in a moment. The Canadian Prime Minister gave a speech on the world stage today. We'll have more on that conversation in a moment. Right now, inflation in Canada ticked up slightly last month to 2.4% compared to December 2024. That's when Ottawa gave Canadians a GST break, which helped to bring prices down. But for Canadians struggling to make ends meet, prices are still headed in the wrong direction. CTV's Quebec Bureau Chief Jean-Pierre Beauchemin reports.
In the mix to bake these cookies, there's a secret ingredient.
You have a passion for coffee.
I'm obsessed, a little bit. Stephanie Presta started a home business, Montreal Latte Heart, combining that shot of caffeine with another passion, baking.
So I infuse my cookies with my coffee, and the coffee makes the flavors really come out of the cookies.
But that is now a recipe for higher costs. The latest Statistics Canada inflation numbers show coffee went up 30% annually, and that sweets were also pricier.
Weather variability and lower yields just means that there's less coffee beans being produced and there's more global demand, and that's driving the prices up.
A similar story has unfolded for beef prices. They're up 16%. The cattle stock in Canada is low, boosting prices. The price hikes for coffee and beef are a big portion of the 5% overall inflation in grocery items. Still, economists see some positive signs in the report.
If you take out beef and some of the secondary effects on proteins, take out coffee, take out a couple of other things that have had extreme weather issues, the news is relatively optimistic for food prices going forward.
For Presta, relief from rising prices could mean that investing in her passions is worth the hard work.
There were moments this Christmas where I was like, what am I doing? Why am I doing this?
And with the cost of dining out going up too, it's hard to find a treat at a sweet price. Geneviève Beauchemin, CTV News, Montreal.
As mentioned, the Canadian Prime Minister gave a speech today on the world stage in Switzerland, raising the disruption of the world order. Let's go to Peter MacKay on this, strategic advisor to Deloitte Canada. Thanks for joining us today.
My pleasure, Marilla.
Okay, we've got some feedback. We're going to try and get rid of that in a moment. Do middle powers, as the Prime Minister has said, need to band together to avoid being on the menu?
I think they do, and it's been headed in this.
Okay, clearly we're having a problem connecting with Peter MacKay. We'll try and reconnect in a moment. We'll take a quick break. Back in just a moment. The Canadian Prime Minister gave a speech today on the world stage in Switzerland. He raised the disruption of the world order. Let's go to Peter MacKay on this, strategic advisor to Deloitte Canada. Do middle powers, sir, need to band together to avoid being on the menu, as the Prime Minister put it?
Well, I think it's certainly a necessary strategy to not become over-reliant on any one big market, not just the United States, but China as well. And certainly you're not seeing investment in Russia, the other big world power. And so it makes a lot of sense, particularly to exercise the comprehensive economic trade agreement we have with the European Union, the Trans-Pacific Partnership. These are all existing trade agreements that allow us to do much more business in many other places. We simply have been complacent about it.
We've talked about how the fact that the U.S. is such a big market, and you mentioned China also a very big market, that they really can't be replaced with other markets for Canada. What do you say to that? Do you agree with that, or do you think a lot more can be done to replace much of what America brings to Canada right now?
Well, I think there's an element of necessity here. But as far as our biggest hindrance to capitalizing on other markets, it's infrastructure and it's energy. Our ability to get liquefied natural gas, other forms of energy into the global supply chain is limited because we've spent 10 years not building pipelines. And of course, the Prime Minister has to answer some of that himself as a financial advisor and a proponent of green energy at the UN on behalf of the Liberal government. But we have to move now and quickly. And I think that's what he is attempting to do, and making friends and partners and cutting deals in other parts of the world makes perfect sense. But we have to mind our own fences here at home. And that means moving quickly to break down interprovincial trade barriers, and getting shovels in the ground and pipelines in the ground, quite frankly. That is really the only way we're going to be able to exercise these demons of complacency and over-reliance on the Americans.
Do you feel like the call out by the Prime Minister was solely based on an economic outlook, or was it also based on a military alliance? We know NATO stands, but clearly America is threatening a country that belongs to a NATO ally. So was this more a call or a wider call to include perhaps a new military alliance?
Well, it's a very, very troubling time, to be sure. And the actions of the words, at least of the American president thus far, have a lot of people trying to unpack what this means for the NATO alliance, of which Canada is a founding member. But also, we should never forget we're members of NORAD here in North America. And so the military-to-military discussions that continue, there is some solace. Those relationships are solid. But of course, the commander-in-chief is making threats to other countries, using tariffs as leverage. There may be a path forward to try to turn this into a joint exercise to protect the Arctic. And that has always been my contention, that we have to work with not only the Americans, but other Arctic Council countries to fortify the Arctic. And perhaps this is a test case with Greenland. The Americans have a base in Greenland. If we work with them instead of trying to pretend we would defend against them, this may be the way forward. And it may, again, be an example of Donald Trump trying to leverage the NATO countries, which he did quite effectively to get countries to agree to 2% and now 5% of GDP spending on defense.
Okay, so if these are threats used as a negotiating tactic for Donald Trump, which we know is what he likes to do, is it a fair negotiating tactic?
Well, no. And I think the Prime Minister rightly has called this out in somewhat delicate language. And, talking about aligning with allies is one thing. Some would say doing it from a podium in Davos is aligning with elites. But I do give him credit for giving a clear recitation of where we find ourselves today and saying, nostalgia is not a plan. And I agree with that. But so too are the announcements of military spending until they become reality, until the money is budgeted for. Talking about there being sort of a fiscal capacity is simply not true, frankly, where we find ourselves economically. And so it's the show me era. We want to see the actual investments coming before we're able to say, in honesty to our NATO allies and our NORAD partners, that we are actually making these investments, purchasing equipment, and preparing for this brave new world. And that, of course, includes a serious threat from China, who the Prime Minister did refer to as Canada's largest security threat just a few months ago.
Okay. You talked about NATO and the questions about will NATO stand. At what point does NATO come undone if you see a pivot, perhaps when and if the U.S. decides to go militarily into Greenland?
Well, that would breach Article 5, and it would call for all other NATO members, all 31, including Canada, to come to the defense of, in this case, Denmark, of which Greenland is part. And so that would literally be the undoing and lead to some other future alliance. It's apocryphal to even contemplate. And yet the fact that we're having this discussion, as are many, just demonstrates what a disruptor and what an accelerator of disunity this president has been.
Okay, very quickly, I'm wondering if you think Canada needs to ramp up its own concept of what it will be like to fight for the sovereignty of this country.
Well, I think you will find in the halls of Ottawa there are quiet discussions happening, and the announced plans by the Prime Minister to invest much more. And yet, I want to be hopeful, but plans to purchase submarines and plans to purchase a new fighter aircraft, make these investments in an accelerated fashion, don't happen without budget. And we're borrowing on an overdrawn account, quite frankly, Muriel. That's where we are. So generating the wealth health and the prosperity in this country predominantly through the export of our resources is the only way we can pay for it without putting ourselves in further fiscal trouble or deep water for a future generation. So yes, everything is go fast, accelerate, try to strip away some of the bureaucratic and red tape hurdles. And I believe that we are in what they say in football is a hurry up offense, and we have to do it.
Peter MacKay, appreciate you joining us on the program today. Thank you.
My pleasure. Thank you.
And the Canadian Foreign Affairs Minister Anita Anand sat down with Bloomberg on the sidelines of that summit in Switzerland, and she talked about Arctic security as well as U.S. relations.
I was the Minister of National Defense between 2021 and 2023 in Canada. And at that time, the Arctic, and indeed Arctic security and sovereignty, was very much on our radar, and it continues to be the case with the Russian illegal invasion of Ukraine, for example, and Russian infrastructure moving further and further north. We, as an Arctic country, 70% of our coastline is interfacing with the Arctic, 40% of our territory. We have no choice but to ensure that we are bolstering our Arctic presence. We are doubling, indeed, our troop work and deployment nationally and internationally. We're going to make sure that we increase our defense spending to 5% of GDP, as NATO allies are doing. This is our promise. $80 billion was in our last budget for defense spending.
Are troops from NATO going to Greenland and going to Arctic regions in order to protect against possible incursions from China and from Russia or from the United States?
So the question of troops in Greenland seems to be so prevalent. Let me just say, NATO allies routinely do exercises, military exercises together. That's a fact. The point that I've been raising with Mark Rutte, the Secretary General of NATO, is historically NATO's gaze has been eastward, on the eastern flank. Canada's largest military operation is Operation Reassurance in Latvia, for example. But what I've been saying to Mark Rutte, including before the attention has been focused on Greenland, is that NATO is the North Atlantic Treaty Organization. NATO needs to have a northern and western focus. This is clear. It is one of the primary reasons that NATO was founded, in my view. Canada's a founding member of NATO, and we deeply encourage a greater focus on the Arctic. And finally, I'll say I'm headed to Greenland, a trip that was planned long before the past couple of weeks' events took place. I'll be going with my Danish and, of course, Greenlandic counterparts to open formally the Canadian consulate there during the first week of February.
Are we watching the NATO alliance collapse?
Not at all. What we are watching is the focus on geographical areas that demand attention by the strongest military alliance in the world. Canada will continue to remain at the table. We are a multilateral believer. We believe in the strength of working cooperatively and collaboratively with our allies, including at NATO and other multilateral organizations. That won't change, but we're also pragmatic. And so we come to the table in order to lead, in order to ensure that the rules-based international order, although it is shifting, is extremely important for global stability.
Are you concerned that the sovereignty of Canada is being threatened by the potential threat on Greenland's sovereignty?
Canada will never be the 51st state. We will always ensure that we stand foursquare behind our NATO allies.
All right, that was the Foreign Affairs Minister. She's in Switzerland for that economic forum. Let's recap what happened on the day as investors respond to both the threat of tariffs on some European nations in their defense of Greenland and, of course, the threat to take over Greenland. Donald Trump says first he wants to buy it, but military force is also on the table. That sent the TSX Composite down 340 points, losing 1%. The S&P 500, 143 points, down over 2%. And the NASDAQ down 561 points, 2.4%. Remember, the American markets were closed yesterday for a holiday. So this is the first time they really have had an opportunity to react to the news that came out on the weekend. A quick look at Netflix before we have to leave you, because Netflix reported earnings after hours and the share price down by over 4%. It also put a new offer on the table, a cash offer for Warner Brothers. That does it for the close today. Thank you very much for joining us. We'll see you back here again tomorrow.